All right, everybody. It is Saturday, July 6, 2019, and this is my newest segment of Markets A Look Ahead. In my opinion, there are several drivers moving into next week. These are a few of them, and we're going to cover that. So let's start off with this. The narrative from the mainstream financial outlets is that our economy is booming. Meanwhile, we continue to get round after round after round of abysmal economic news. They really think you're stupid. It really baffles my mind. We haven't honestly had a single piece of good economic news in as far back as I can remember. But again, the narrative must be maintained. And this is why people get caught blindsided every single time there is a bad move in these markets. Again, people equate the stock market to the economy, and nothing could be further from the truth in this environment. And I've covered this at length, and we're seeing the gap between what's happening in the economy and the stock market get wider. Debts and deficits continue to explode, like I've been saying now for the better part of a decade, with no end in sight. All of this is being built on the back of a relentless acquisition of debt on an epic scale. That's the truth. There's no real growth whatsoever. It's debt that's growing, and it's giving the illusion that things are okay. But again, nothing could possibly be further from the truth. So with that said, and we know what happened just yesterday, we have our president talking about price controls. We have our president talking about currency devaluation. We have our president talking about cutting rates to zero. Sounds like a third world country to me. But again, everything is booming. You've got to be kidding me. You can't make it up. So this coming week, we're going to hear from the Fed. Powell is going to speak, and the market is going to listen to every single word that comes out of its mouth. All the market wants to know is how much of a hit of drugs is coming down the pike. A hit of drugs is coming. Without it, this market is going to sleep with the fishes, like I explained to you. So let's see how that plays out. I'm not actually sure what day this is next week, but it's coming this coming week. China's a big one. Although China came out specifically saying that there will be no deal until the president lifts the current tariffs. You remember he promised twice not to raise tariffs on China. China took this as weakness or a sign of weakness and then hit back saying, okay, you want a deal, Mr. President? Remove the tariffs, otherwise you're not going to get one. China will wait this out no matter how much they have to suffer. Period, the end. People here in the United States, they can't handle anything. China knows that, and they're playing off of it. But I will guarantee you pretty much that you're going to hear that China talks are going well. It's a lie. Whoever tells that to you first this coming week is the prime liar. So whether it's going to be the president, Kudlow, or some other guy or woman, when you hear that, understand what you're looking at, and you're listening to propaganda like the propaganda ministry of the Nazis. That's the truth. Earnings. We keep hearing about how earnings are coming in at probably the lowest expectations in a long time. What does that mean? Let me explain this to you. The fact that they're putting such a low guidance here with regard to earnings that are going to be coming means that anything positive is going to be good for the markets. This is how they spin it. Oh, look, earnings came in better than they thought, even though they're going to be abysmal. You understand? So this will be stock market positive. It's just so simple. And then, of course, we have the non-existent yield curve. We did get some normalization, if you want to even call it that, with regard to the longer end of the curve. Again, nothing is going to go up or down in this market in a linear fashion. mark my words here for the millionth time, they cannot prevent the long end of the curve from dropping. They can mess with the short end of the curve via the federal funds rate. Sure, they can do that all they want to. Our president calling for zero with regard to the federal funds rate is a step towards going negative, which, again, most of the developed world right now has negative yielding debt. It's incredible. And actually, all of it's negative yielding, even here in the United States, if you weigh it against the actual rate of inflation. But you're not supposed to know that. You're supposed to be kept dumbed down. You understand? But you're not dumbed down. And I know that to be a fact. Anyway, so these are the things that we have on the table right now. What we have to look at, what's coming down the pike here. It's going to be a very interesting week, in my opinion. And I'll be here to walk you through all of it. And we're going to have a good time. We're going to laugh, maybe cry. Probably not cry. More than likely laugh. Because the truth of the matter is, they can't stop doing what they're doing. And no amount of rate cuts, no amount of currency devaluations or price controls can stop what is coming. And they can fluff it up. They can talk about whatever they want to talk about, blow sunshine up the crack of this market and everybody else, try to convince people that everything is great as it's ever been. But the truth is 100% the polar opposite of what they're explaining to you, and they think you're stupid. And they're going to play off that. But again, you're not stupid. That's pretty much it. All right, with that said, enjoy the rest of your weekend. I'll see you on Monday. I can't wait.